News, Steve Moore, better than expected. What's your initial thought here?
Yeah, everything I just heard I like a lot.
Yeah.
You know, 250,000 when you include the revisions. That's a good number. It's not a great number, but it's a good number. The only thing I would add, look, you know, we saw good across the board increases across industries and jobs. The one thing that does concern me, it goes back to what we were talking about a few minutes ago. Most Americans think the important unemployment number is that U6 number, Maria, and that's still at about 10%. Now that includes, for people who don't understand that statistic, that includes people who can't find a full-time job. That includes a lot of the people who've fallen out of the labor force. That's still 10%. That's still a pretty lousy number. We need a lot of improvement there. But I was happy to see wages rise because I root for the American worker. I want to see Americans have higher wages, and I want to see them have a lot of jobs. It looks like we got that in November.
Yeah, and to touch base on that, I mean, average hourly wages rose 0.2% this month, but that's in contrast to last month when it raised 0.4%.
Right.
So it did raise, but it was a little bit slower. And
Fed raises rates on this. Fed raises rates on this.
The Fed was going to raise rates even if it was 100,000 jobs.
Yeah, probably right. Probably right.
In less than 2 weeks.
But Joni, getting back to the American economy here and how it's so strong, I mean, look at this construction number, 46,000. I mean, what are your thoughts on that?
We talked about that before.
You said that earlier.
I did think we were going to see a strong number. It's actually stronger than I did, predict or expect. But I do think that's a great sign, because the construction and the manufacturing jobs were the biggest job losses during the recession.
Yeah.
And we really haven't seen those positions come back. So this is a very strong number, but it does show that, home, retail, the real estate sector is moving in the right direction. Certainly the professional and business service jobs, the healthcare jobs. I mean, overall, this is a really good report across the board. The things that we were looking for.
On home construction, there was a really good data point yesterday that 1 million fewer homeowners in the third quarter are now underwater than they were even in the second quarter. That the percentage of people underwater on their mortgages is down to 13.4%, which frees up people to build, buy, and purchase.
Absolutely.
And even before this, even when we were talking about sort of like a slow recovery, it's been housing and autos.
Right.
That's where the money has been spent.
I guess the danger, and these guys, Steve can speak to this, is that because those are driven by incredibly low interest rates and very cheap, cheap money and easy money.
What about that, guys?
With auto and homes.
Yep.
Right. Maria, I think, and particularly for autos, we've seen lending standards have gone absolutely out the window. So autos right now are largely where housing was, say, back in 06 and 07. It's not as big a part of the economy, but in terms of the lax lending standards, we're in that same place where you basically sign your name and you drive away with a car, no matter what your credit standards are. So I'm not convinced that that the auto gains are sustainable. Now, having said that, and I think this is a very ho-hum report. I mean, I really do. I think it's a B. America should be a straight A economy. We keep getting a lot of Bs, and we seem to be fairly happy with that, which I don't like, and I think that's going to change. But I would say this, one encouraging thing, to say something very positive, the fact that construction jobs came back so strongly, that is a male-dominated industry, and that's very important because when we talk about workforce participation, for men, it is at an all-time low right now.
Right, but
so that is very encouraging.
Up a little
this report gave the Fed the absolute cover they needed. I mean, think about it. If this number came in above the average for the year, the average is 206,000. This came in at 211,000. It reinforced that the domestic economy is getting stronger. Think about that. 46,000 in construction. Healthcare was up in the 20,000s. I mean, this is giving them cover. They have to raise. But this leads to the overall GDP number that Steve alluded to, Steve Cortez alluded to in the last segment. We're at a sub 2% possibly, and we've seen seasonality. The first quarter GDP could be really weak. I mean, you've seen that happen over the last couple of years. So this could be where the Fed raises for a little bit and then waits for a couple more meetings.
Look at this market reaction, you guys. Dow Industrial's now looking up 70 points. Hey, we haven't talked about the revisions, okay? October is being revised up big. These are private payrolls up in terms of October. And we had a blockbuster number in October, and now we're getting revisions that look good.
Yeah, definitely moving in the right direction. The one thing, if I could say, there's not that it's a negative, but definitely a step backwards, is the professional and business service sector normally creates stronger jobs. Last month they created 90,000. This month in this report we're seeing 27,000 jobs created.
Yeah.
So we still created jobs, but not as strong as we've been trending over the last 2 years. So that was a step back.
Yeah. You know what worries me, in addition to that a little bit, Maria, is these manufacturing numbers, because, you know, you would expect we would be seeing a boom in manufacturing right now. We have the lowest energy prices we've seen in many years. With the low gasoline prices and low electricity prices, you would expect that to be a big boom in manufacturing. And one of the things about these, people should realize about these unemployment reports, they're lagging indicators of where the economy is, because they're kind of running behind. And we saw, as I mentioned earlier, some really troubling numbers on manufacturing. I'm a little worried about that sector right now. Those are the people who make things.
Manufacturing has been under a rock now for a long time. What is the catalyst that's going to turn it around?
You know, Maria, though, that sector is being impacted so much by automation and robotics.
Right.
And so even though we may see more productivity and see more innovation and manufacturing in the U.S., those jobs, I have to say, have gone more to automation and robotics.
Forever?
They're
gone forever.
Those jobs are probably gone forever.
Yeah, manufacturing is going to be subdued because of the stronger dollar, and the dollar is going to get stronger because the Fed's going to raise rates right now. So you're not going to get manufacturing is going to be in the doldrums for a while, because the American economy is back, and you know, people have talked about we're still in a recovery. We're not in a recovery. We've already recovered. I mean, there's no recovery. I mean, we've been in a growing economy for the last couple of years now.
That begs the question to everybody: is this as good as it gets?
Yes, until
I hope not.
Is this
until
end of
government
cycle,
policy.
as Keith keeps saying?
Late cycle, yeah. What do you guys think about that? What
Government
Dagen
policy.
said?
Well, look, I disagree with.
Yeah, I think it's going to be the best we get until we actually get an administration that is going to incentivize business to reinvest all that capital that they have.
That's called fiscal policy.
Yeah,
and
exactly.
president
Until fiscal policy comes around. I mean, I mean, there's been, and you've even seen former Fed officials talk about that. They said, don't blame the Fed about this slow growth. They're like, blame the administration that
And I just want to point out, Wall Street Journal editorial today is about Mario Draghi, and essentially says the same thing. Stop bitching about the ECB and Mario Draghi, and those countries need to focus on just sea change reform. You brought it up.
How many years have we been talking about tax reform already, Steve Moore? I mean, we need fundamental change in terms of fiscal policy.
Yeah, I mean, look, there's 2 or 3 things we could do right now that would, I think, supercharge the economy. You're clearly right. We could cut that corporate tax rate, and, you know, when you've got companies like Pfizer leaving, Maria, the alarm should be going off in Washington that there's something wrong there. We ought to be developing our energy, not curtailing it, as President Obama was saying when he was in Paris this week. And there needs to be some fixes to Obamacare. You know, people are going to be facing big increases in their insurance costs next year. That's going to be a real problem, by the way, Maria, for family finances if these projections of big increases in health care costs hit family pocketbooks. I'm worried about that. And I have to say, you know, I'm not so sure that this recovery is all there. When you see these polls, I saw a Fox poll, Maria, about 2 weeks ago, 35 to 40% of Americans think America's still in a recession. This just hasn't hit a lot of pockets of the American economy yet.
Yep.